it's time now for Charting Futures. Here with his bull and his bear views on two metals is Bloomberg Intelligence's Mike McGlone. Mike, what are you looking at here?
Hello, Romaine. Well, first we're starting out with gold, the bull case. We'll have that chart up on the screen in a second. Gold, for the last 10 years, we start over here on the left side, Matt. You can see it's built a distribution of volume. I call that the base. It's working against the base. It's centered around 1,300. So that's the base to work against for support. If you come over here, we see the range has been, here's the range. The market's right now about the midpoint of that range. We look over this. This is the 100-week moving average. It's starting to head higher. So gold's starting to break out, and it's right at the midpoint of that bear market from 2011 to 2015. It's just starting to break up, and this is where we come up to this saying was time decay is good for gold. More time it spends comfort there, the more bullish it gets. With that, let's pass on to copper. Copper's my more bearish case, and it looks a little bit more the opposite. So we'll pull up the copper chart right now. Same thing, I have a weekly chart. We had a bear market break down the distribution of trading, the volume. Basically, the apex, the normal distribution, is right here, about $3 per, I got a little screen up, but $3 per pound. And the key thing for copper to watch is it's a bear market. So let's look at the 100-week moving average. It's trending down. Copper made one little failed attempt at the midpoint. Bam, it failed. And this was the key thing that led all the markets lower last year was copper. So I look at copper as the bear case. And now if you put them together, Romaine, will push it back to you. It has some implications.
All right. So, Mike, kind of give us some sense here of what the macro implications are.
Well, it's a copper-gold ratio that a lot of people love to look at. We love to look at. It's a great indication for yields. So copper going down, gold going up is the same thing with, this is the chart with the Treasury 30-year yield. Last 10 years, it's almost tick for tick. So copper, gold, that ratio is in yellow. Look at that. It started around, the ratio is here, but yield started around 5%, and then they've been heading lower since. The one thing significant, Matt, if you can go over here on the lower end, we've had this drip this year. It's kind of blipping higher recently. The question is that sustainable? The way I look at it is the trend's your friend. It's down in yield, it's down in copper, up in gold. They need something significant to end that trend. And what that is, I don't know. I look at it, it's more likely the trend's going to stay the same. It might accelerate, and it's going to take something significant to reverse it.